tracking for you today on Startup Street. Now, Nestasia, which is a home decor and lifestyle brand, started in 2019. They've raised $8.35 million in a fresh funding round from Susquehanna Asia VC, Stellaris Venture Partners, and other angel investors. They plan to use this capital for offline store expansions, new category launches, brand building, and hiring as well. This follows a Series A round of $4 million led by Stellaris again in 2021. For more on how this brand plans to scale and grow its presence with the fresh capital infusion, joining me now is Aditi Muraka Agrawal, the co-founder of Nestasia, and also with me is their investor Rahul Chowdhri, partner at Stellaris Venture Partners. Rahul and Aditi, thank you very much for your time here on CNBC TV18. Aditi, since you've got the money, tell us where you're going to be deploying this $8.3 million. You're already present in 6 cities with 7 outlets, and you want to get to 30 stores by next year. What is the strategy with this capital-heavy offline presence? Are you looking at going deeper into markets or going into newer cities? And how does it tie in with your online strategy?
Thanks a lot for having us. We have 8 live stores now, actually. One opened up 2 days ago. Primarily present in north of India, in Delhi NCR, as well as in Bangalore and Hyderabad. Hoping to consolidate that further with the new funding, as well as to foray into West India with cities like Pune and Maharashtra. These are all EBOs and fully company-owned. And yeah, the aim and objective is to have about 15 stores by the end of this calendar year, and 40 or 30 new stores by the end of the next calendar.
Well, let me ask Rahul then, because, Stellaris has invested in Asia very early on. You've seen the company through its recent growth phases. What were the key factors that made you believe in the business from the start?
So thanks for having me here. There are a few things that we really liked when we made that investment about 3 years back. First of all, the market itself, it's a $15 billion plus home and decor and kitchen market. And a large part of that is already moving online. When we invested, more than 10% was already online and has been growing since then. The second reason is the changing consumer need. Today's 25, 35-year-old customer who is either renovating or doing up their new home wants something which is trendy, stylish, and modern looking, but something that is different from what they find in their friend's home. So that is the problem that is to be solved. And we felt that doing it online, given the number of SKUs one need to have and the freshness one need to have, was the right strategy. And there we found both Aditi and Anurag, the 2 founders of Nestasia, to have the right mix of understanding what consumers want, but the back end being able to manage the complexity of the SKUs. And that was the reason why we ended up investing in them and being very happy with the journey.
Well, let me pick up on that freshness of products, because Aditi, you have 1, plans to expand the product range itself, and 2, come up with weekly new launches. That sounds like a very capital-intensive strategy to me. How does the unit economics work here?
Right. Fresh new launches, the way we look at it is people need newer things and newer products and newer designs in the category to keep coming back to us. They need a reason to browse online and then make a purchase decision, and hence the fresh new launches every week. In terms of it being capital intensive, we do have a very strict policy of optimizing these SKUs, and hence with the fresh new launches, there's also sustaining our top sellers and best sellers, as well as with the seasonal launches that do come by, they also are then discontinued, and they make space for the newer products to come in.
Rahul, do you think this really can be the differentiator? Because, the home decor lifestyle segment, it has the presence of multiple brands, not just in the organized segment, in the unorganized as well. From an investor's point of view, how does this operational model contribute to the brand's competitive edge?
Actually, that is the competitive edge, I would say. Lot of the the buying today happens in the unorganized sector. What customers like about unorganized sector is the variety they get. But the challenge is the quality. And what Nestasia brings is best of both. And how they are able to do that is actually the math and the data science they use at the back end. So while they launch close to 400 to 500 SKUs every month, and they have at any point of time 4,000 live SKUs. They also are able to churn out stuff that is not working and double down on stuff that is working. And that is their edge in my mind. And that is why people always feel there's something new to buy on Nestasia. Even regular stuff like, bottles or glasses or jugs, there is something unique in the design that you get to see when you buy from Nestasia.
Well, yes, Aditi, on that note, before we let you go, let me quickly get the numbers from you. What sort of monthly sales and revenues are you currently clocking? At what pace is this growing? And, what about profitability?
What I can tell you is FY23 was at 37 odd crores. And the aim is to reach the 1,000 crore annual revenue run rate in the next 4 years. That's what we're working towards at Nestasia. In terms of profitability, this year we should be PAT positive. And the entire team is working towards that. So hopefully that comes by.
Well, we'll wait to hear more updates on that, Aditi. But on that note, we're completely out of time. Rahul, as well as Aditi, thank you very much for being with us here on CNBC TV18.